Hello and welcome back to the live stream, ladies and gentlemen. My name is JT and you're watching Black Box Trading. In today's video, we're going to be doing a market update. Feel free to drop any projects that you would like me to take a look at in the comments section, and we can take a look at some projects. Not a whole lot to update you on the market. Honestly, like Bitcoin's just moving in slow motion right now. It's a breakout, but there's no volume, there's no follow through. I feel like there's this eerie stagnance in the air right now, and maybe we remain stagnant up until the FOMC meeting. That's a month away. It's a possibility. You know, there will probably be a shakeup before, but yeah, it sure is slow in the markets right now. And you know, the numbers don't lie. There's only 6 people watching this live stream right now. At the height of the volatility, we had over 100 people, 140, 150 people watching, and now we're at 6. Shout out to the diehards. The diehards are usually the ones that make money anyways. So let's get into it. And we'll start off with Bitcoin here on the daily chart. Like we said, this downward sloping line of resistance has broken to the upside. We are flagging. It's not moving quickly, but we are flagging. If we go down to the 4-hour to take a look at that flag, the flag, it's anyone's guess at this point. You know, we're spot long, so we're happy to take a breakout if it just breaks out from here. But we do have this kind of a rounding over formation, so I am starting to call, you know, a little bit of a pullback down to this downward sloping line of resistance. I think it needs to be retested. It doesn't have to be, but I think that it would be beneficial for price to move up higher if we had a little liquidation, like a little liquidity test. That's why they call it a retest. It's testing the bulls, it's testing the bears, and it shakes up the order book. When the order books become stagnant, you see this really slow, meandering price action that just doesn't do anything, and that's kind of the situation that we're in right now. So to alleviate that, a little liquidity dip, a little move down would shake things up, and I think that would V-shape recovery after that. So we'll see. But you know, we can also look at it this way, where we're range bound, so there's really nothing to get too bearish on. I mean, we're just in this range. And as long as we remain in the range, we will remain in the range. Once we get a breakout, either above or below, there should be an acceleration. But once we, you know, if we get a breakdown, it'll look something like this. If we get a break up, it'll look something like that. But as long as we are stuck inside of this range, the assumption is that we're going to remain inside of that range. It's a very tight range, so I don't think we can remain there for too long. But who knows? Who knows? There's a serious lack of demand. There's a lack of volume, not demand. There's a lack of volume in the market overall. So we'll have to see. S&P also had a super slow day. That was the daily close for the S&P. Basically, it didn't move at all. Nothing at all. So I'm not sure exactly what the market is waiting for. I don't know what clarity they need. Obviously, if we get a rate cut, that would be very bullish for the market, but that's a few months away. How far away are we from the FOMC meeting? Let's get the numbers here. We'll go Fed watch. 19 days. Okay, so we're not even a month. We're not a month away. 19 days away from the next FOMC meeting. And it's looking like it will be staying the same. Staying the same. That could be good if it does end up being a cut. That will mean that the market hasn't priced in a cut. So if the market is pricing in rates staying the same, and we get a cut, then you know, the market will need to reprice, and you will get asset prices going up. Same thing over here on the NASDAQ. Just a small little candle. Now the same cannot be said for gold. Gold, man, just an impressive rally on gold, and gold has deserved it. I mean, look at this accumulation. Let's go to the monthly, because it's really, that's how you can see it on the monthly. it did this massive consolidation. It was 1,300 days before the breakout. And then as a result of that breakout, just beautiful price action. The gold bugs really got a win here this cycle. 63% up on gold. Now, I know to the shitcoin traders that doesn't sound like anything impressive, but a shitcoin portfolio has a couple thousand bucks in it. A gold portfolio will have hundreds of thousands, millions of dollars in it. So, you know, a 63% jump, that's massive. Mexi, welcome to the chat. Welcome in. One of the diehards. Speaking of the diehards, if you guys are watching this, say hi. Let's do a special shout out to the diehard viewers out there. Numbers are down, and guess what? That means you're not a crypto tourist. That means that you are one of the OGs that's paying attention. You are locked in. You are dialed into this market. So make yourself known. Special live stream just to you. This is an AMA. Anything you guys want to talk about, we're free to talk about. GME is there was an announcement on GME with Bitcoin. I didn't prepare for what that announcement was. Does anybody know what that announcement was on GME? I think they said they're planning on buying $1 billion worth of Bitcoin or something like that. Don't quote me on that. I'm just thinking out loud on a live stream. But it was GME. GME Bitcoin. Let's see what pops up here on the old Twitters. GameStop implementing a Bitcoin dividend. Okay. That would be cool. If Ryan Cohen announcing that GME is adopting a Bitcoin treasury strategy, that will be groundbreaking. Blah, 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 blah. Yeah, so it's all just, it seems to still be in the speculative phase right now. But guys, I'm telling you, once this, it's more than a speculation at this point. People are speculating on timing now. They're not speculating on whether or not GME has purchased Bitcoin. They're speculating on when the announcements come out. Appreciate your insights. Thank you for hosting. I always share the lives. Oh, thank you. I appreciate that. They said they would purchase Bitcoin, but then they had a stock offering and diluted the shareholders. Well, it's so a stock offering. Okay. Yeah. No, a stock offering is dilution. Yeah. They can still, you know, if they're buying Bitcoin though, they're not holding on to this melting ice cube that's fiat. If they were holding a cash position, if the shareholders were holding a cash position, then, you know, dilute them a little bit in the short term and then hold Bitcoin and then fuck around and find out. All right, let's bring this back over to the S&P. Let's see how Bitcoin dominance is doing. No surprises there. Still green. Still green in Bitcoin dominance. Let's take a look at some of the coins that we haven't looked at in a while. Track we've definitely looked at. Caspa. What's Caspa up to? Shout out to anybody that got out of that trade. We were talking about Caspa and where to exit gracefully. Was it on this chart? Yeah, we were saying as soon as we broke this neckline here of this this head and shoulders formation, people, here's kind of a nice little example of a head and shoulders, because people get really confused by head and shoulders, and this is a perfect example as to why a head and shoulders can be confusing. When people hear head and shoulders, they think the obvious play where it's, you know, you have a shoulder, a head, and a shoulder. Now that's the textbook head and shoulders, right? And then you short the breakdown of the neckline. That's the textbook head and shoulders. But let's just break it down. What is a head and shoulders really? What a head and shoulders is a series of highs, higher highs and higher lows that breaks to a lower low and a lower high. So forget about the pattern of a head and shoulders and think about the trend of a head and shoulders. And then you would have been able to identify what's going on here. So let's erase that and dissect the head and shoulders here. We had a series of higher highs and higher lows. High, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, our first lower low, followed by our next lower high. So the trend changed here. This is where the trend changed. And then what happened as a result of that trend change, pukes down. So for a lot of the new traders out there, you start to identify, okay, a bullish pennant, a bull flag, a bear flag, an inverse head and shoulders, a cup and handle. Don't focus on the pattern. Focus on what the pattern is telling you about the overall trend, and you will be way better. You will be a way better trader. Trend is really underestimated as a strategy, as a technical trading strategy. If you're in the spot markets and you're noticing that an altcoin is uptrending, you can just buy it. You know, not financial advice, but if you're noticing something is just uptrending, the trend is your friend until it ends. And it's one of the easier trades out there. So really, and the nice thing about trends is you don't even need any indicators. You don't need any indicators. You can do it on a free TradingView account with no indicators whatsoever. You can buy into an uptrend and you can sell on a downtrend, or you can sell on a break of price going below a moving average. Let me show you kind of what that would look like if we had alphanumerics. Let's say you sold on the break of the 50. So you bought during an uptrend, and then as soon as price crossed this orange line, as soon as price crossed the break of the 50, you got out at 14 cents. People are holding bags at 7 cents, so you made twice as much money as them. Anyways, just a little quick lesson on head and shoulders. But yeah, we called this one in real time. We said right here, when this was dumping, this was a massive dump day. We called it live on the stream, the actual tip saying that's it. That's the bottom of this move. And then we said, you'll probably want to sell here. Go check it. Don't trust verify. Go check the tapes. We said it live on, go check the live stream from Monday, the 3rd of February. It's live. It's there. Don't trust verify. How's Sats doing? I'm afraid to look. Good Lord. Sats just got hammered. Hammered. Not the time for ordinals. Not the time for ordinals. We're still, we're not even way up on Sats anymore. Man. Only 200% up from the mint price. That's a hell of a retracement considering we were 10,000% up from the mint price at one point. I'm still holding. I knew as soon as I minted these things, it was too early in the cycle. I'm going to hold through the mid-cycle retracement. I couldn't sell if I wanted to, honestly. It's not liquid enough. We need to wait for the hype. We need to wait for the FOMO to come in. All these people selling here, like they're selling tiny little bags. It's not whales selling. There's just not enough. Not enough liquidity. That's the thing about Bitcoin. You can't rug pull it. It's impossible to rug pull Bitcoin. because we don't have liquidity pools. So a lot of these projects, a lot of these ordinals, yeah, they're way down, but they weren't rugged because Bitcoin doesn't have a liquidity pool. So when these things go up again, they will go up so much faster because it works off of the traditional order book way of determining price, which is how everything in the world is determined, by the way. It's only scam chains like Ethereum and Solana that use liquidity pools to determine price. Because everything works on an order book, everything in this world is worth as much as somebody is willing to pay for it. So it's like matching a buyer and a seller. When these things move, a liquidity pool will move price slower than an order book. In both directions, up and down. The problem with a liquidity pool is you can rug it though. So a rug is pretty instantaneous. But when this thing starts going again, it won't take much. It won't take much volume at all to get it back up. Whereas with a liquidity pool, it takes a lot of volume. Got to get on diesel, on alkanes. Never heard of it, Mike. We'll take a look. Do you believe bull market won't happen this year? I'm starting to believe it won't. No. Nope. Let's take a look at that. Diesel. Am I just not spelling that right? Okay, diesel's not showing up. Alkanes, what's that? Bro, what are you talking about? Diesel and alkanes. Never heard of alkanes. Nobody's heard of alkanes. If it's not on CoinGecko, what do you want me to do here? Either check the spelling or help us out. Give us a link or something. Arbitrum. So there's a building narrative on Ethereum. There's a hopefulness inside of the Ethereum community, which is mind-boggling to me because it's been nothing but down only. But I am seeing Ethereum pop up more in the algos. So are we approaching a floor? Are we getting close? I mean, we're damn near a full retrace. We're almost at a complete retrace of the prior cycle. Is that an area for a bounce? If we hit 16,000, or sorry, yeah, 1.6 million. If we hit 1.6 million sats per ETH, is that the area of a bounce? Potentially. But it makes me kind of want to take a look at some of these ETH plays. Our BTC looks like absolute garbage. Absolute garbage. It's on Bitcoin. Never heard of it, man. Is it a rune? We need more information. Is it a rune? What is it? Okay. I'm not interested. Just take me to the things. Alkanes. Diesel. Need more info, man. That's the thing about Bitcoin is it's not as easy to index as Ethereum or other chains. So not every platform is going to have all the info. Let's take a look at Arbitrum on the dollar pair, on the shitcoin pair. OG from the crypto jungle days. Can you look at ETH? Any signs of a bounce on this piece of shit? Certainly no signs of a bounce. Certainly no signs of strength whatsoever. We can take a look at the ETH on the slave currency pair. I got into a Facebook argument today with an asleep person on currency debasement. He was getting all angry at rich billionaires and companies for making him poor. And I said, well, don't you think the government printing money has more of an issue to do with it? And he did not know that the government's printed money. Guys, it's wild. Wild. Wild to me. Yeah, ETH, man, there is not a lot. Like, look at how horrendous. Like, what has ETH got? ETH has got nothing, man. I mean, it will turn at some point. I just can't fathom an environment where Bitcoin dominance is dropping heavily and ETH is not going up. But my God, what weakness. What incredible weakness we have seen. I am so glad I ditched all of my ETH. Sui. Yeah, let's take a look at Sui. We were watching Sui. Sui was looking good, and then Sui stopped looking so good. We have our line in the sand here. Above this orange line, we're bullish. Below this orange line, we're bearish. We're below it, so we're bearish. But so far, let's look at the price behavior of Sui here. What is the typical price behavior of Sui? Kind of does these rounded bottoms. And it's kind of starting this rounded bottom now. It's too early, I think. I want to see the bottom flatten out. I want to see there to be a little bit of flatness and then a little bit of a rise first. When you see this rise, that's probably a good indicator to get in if you want to take a position early. But the better play would be to get back on top of this orange line and then buy a breakout right there. That would be the safest bet. Now, context is everything. Bitcoin needs to be at all-time highs, and Bitcoin dominance needs to be declining. So if you have an entry on the exit of a rounded bottom with Bitcoin at all-time highs and Bitcoin dominance falling, you have a recipe for a really good trade there. Search up Airhead. We're still trying to find this Airhead Bitcoin. Let's see what that shows up. Airhead building. Jeez Louise. What is this obscure thing? Inflatable ordinals. Fat cult. Growing Bitcoin's waistline with smart contracts via Alkynes, co-founder of the CPO, Ollie Wallet. Airhead.fun. This is pump.fun on Bitcoin. Jeez. This is a little too degen for where we are in the cycle, ladies and gentlemen. But it is fun looking. Hopefully nobody got a seizure from that one. Yeah, this has got this has some potential, as ridiculous as that statement sounds. But we're just nowhere near this kind of shit working. Nowhere near. Like meme coins are so down bad. Like, you have a lot of repair. Repair takes time. Time heals all wounds, man. Time heals all wounds. But yeah, we're nowhere near anything like that working anytime soon. And by that point, the thing about memes is you just never know what's going to catch on, because they're baseless. They're completely baseless. So there's a lot of timing and luck in the meme coin world. A lot of new money never considers dilution over time. Yeah. The thing about new money is they just cannot buy Bitcoin. They cannot wrap their head around Bitcoin. Bitcoin's at $84,000 a coin. They see the price of one coin and they're like, well, I can't buy that. I can't afford one coin. The unit bias is a really big deal. Unit bias is a really big deal with Bitcoin. They see that $84,000 price tag and they're like, well, fuck, I'll get something else then. I'll get something else I can afford. Not knowing that, they just, the unit bias is what screws people over. It's what gets them to buy something that they shouldn't buy. But they buy it anyways, thinking that one day maybe it'll be at Bitcoin's price. A lot more supply on a lot of these alts than the previous bull cycle. Yeah, there's way more alts. Way more alts this cycle. Over 10 million. Over 10 million altcoins. In the best altcoin season we've ever experienced in 2017, there was like 10,000 tops. There was way less. Been coming to this stream the last couple days. Appreciate all the education, breakdowns, and psychology. Thanks for doing that. You're very welcome, Chris. You are very welcome. If you like that kind of stuff, get into the Discord. We got if you're looking for educational material, we got lots of stuff in the Discord, and you can just ask questions. I'm very active in Discord, and I am happy to answer a broad scope of questions. I like to nerd out on privacy and self-custody issues, but obviously trading is a lot of what we do here as well. But if you want, what I'm saying is, don't be afraid to ask super technical questions about Bitcoin and privacy and wallets and blah blah blah. I love that stuff too. That's exactly why certain companies do stock splits to attract smaller investors. Yep, 100%. Yep. But with a stock, you can't buy a fraction of a stock. So maybe, that's part of the unit bias. James Lopp was on the Simply Bitcoin podcast a couple days ago, and he said something that I agree with. He said, if you don't understand that you can buy fractions of a Bitcoin, then you don't know enough about Bitcoin and you shouldn't buy it. I agree with that. If you are stuck on the mindset that you need to own a whole coin, then you haven't done enough research and you shouldn't buy it. It does curb adoption, but you don't want Bitcoin to be adopted by stupid people. This is a consensus protocol. We have to remember that. We have to remember that moving forwards, that this is a consensus protocol. If you get a bunch of stupid people holding on to this consensus protocol. And the general consensus becomes, well, maybe we should increase the block size. Maybe we should do this, or maybe we should do that. And you get a bunch of stupid people who don't understand Bitcoin making up the majority of consensus. Then something bad will happen to Bitcoin. So keep the stupid people out. Keep the stupid people out. If they think they need to buy a whole one, good. Thoughts on XMR. So Monero, like I said, I'm sure my comments on privacy are what prompted this request. I was a huge fan of Monero, but over the years, I have seen enough on Bitcoin to realize that I think Bitcoin is private enough. And I think that not having, if you really want mass adoption, you actually need transparency. So a perfect example is what we're going through right now with MicroStrategy and Coinbase and BlackRock. Guys, there's paper Bitcoin out there. There's paper Bitcoin out there. And we have large institutional buyers that are not disclosing their wallets. And to me, that's unacceptable. That's unacceptable. If you are going to offer public financial products to people, we should not have to just trust you. That's fucking bullshit. We should not have to just trust you. We should have the ability to audit you every 10 minutes. So if you are going to offer an ETF, I want to know where your wallets are. If I am going to, let's fast forward here to more of a global adoption of Bitcoin. Let's fast forward to the point at which you have the option to pay your taxes in Bitcoin. If I'm going to pay you, the government, my Bitcoin, if I'm going to pay you taxes with my Bitcoin, I want to see it. I want to know where it is. I want to know how the government budget is constructed. I want to know which wallets are responsible for which responsibilities. So I've come around on the transparency piece a lot more. Personal sovereignty and personal fungibility, I'm still an advocate for. I shouldn't have, if you send me some Bitcoin, I shouldn't have to have the ability to know what your net worth is. And I still believe that. And I practice using Bitcoin in a way that nobody can ever determine how much Bitcoin I have. When you learn how to manage your Bitcoin properly, you should basically, it'll show that you hold no Bitcoin. So Bitcoin is private enough. But when we put people in positions of power and we put them in a position of trust, we want there to be verifiable trust. So if you're taking the Bitcoin, if you're the government, I want to see the government wallets. If you are Michael Saylor saying that you're buying thousands of Bitcoin every month, I want to see where your thousands of Bitcoin are. So while I do like the idea of Monero, it doesn't scale. It will always be an underground currency. Monero will always be a government for people only for people. It will never scale to institutions. It will never scale to governments. It will never scale to the size of a global reserve currency, whereas Bitcoin can. And the nice thing about Bitcoin is Bitcoin can be built in layers. You can add protocol layers. So we can have the best of both worlds. We can have privacy for ourselves, and we can have accountability for the people that we put in power. So for that reason, fundamentally, I don't think Monero is going to do anywhere near the potential that Bitcoin is going to do. But aside from that, I really like this chart. So that whole rant aside, I really like this chart. I think that, this is another perfect example of a coin that's ready to rally. This is a beautiful backup LPS. Like, this is ready to run. This is ready to run, and it'll probably do beyond the all-time high. I wouldn't be surprised to see Monero at $1,500 this cycle. So from our entries into Monero, and yes, we had bear market entries into Monero, basically on the day that Binance delisted. On the Binance delisting day, we were buyers. Up to $1,500, we got at least a 10x in there. Yeah, 1,200%. I think it's totally doable. I think it's totally doable to see Monero up around 1,500. We'll call it 1,400. You always got to go just shy of those psychological levels. I think it will blast through 1,000 because its all-time high was 500. But ultimately, if you're buying Monero because of its privacy features, there already is, but there's going to be a lot more privacy features on Bitcoin. If you use the Liquid network, you're private. If you use the Lightning network, you're private. If you run a Bitcoin node and you process your transactions through your own Lightning channels, you are beyond private. That's 100% privacy. So privacy does exist on Bitcoin. And if you are an advanced Bitcoin on-chain Bitcoin user that knows how to manage your UTXOs, and anytime you send another person money, you know how to hide your wallet, you're private. You're private. I'm actually going to share with you guys something for your consideration. It's called Bitcoin Guide. Bitcoiner.guide. That's the one. And where is it? Bitcoin Privacy Guide. Bitcoin Privacy Guide. Yeah, right here. Bitcoin Privacy Guide. Read this. This should be your Bible. Your Bible to Bitcoin privacy. The Bitcoiner Guide to Privacy. This will give you the lowdown on how private Bitcoin is. If you know how to use Bitcoin, if you are an advanced user of Bitcoin, which I consider myself to be a power user of Bitcoin, because I'm private, you can transact with me. I can send you Bitcoin and you will have no fucking idea where my Bitcoin is. You will have no fucking idea. And any on-chain analytic firm would struggle to identify my Bitcoin. I know that sounds cocky, but I understand enough of the network to know that I'm private. How can liquidity pools be rugged? So it's because of the liquidity pool that you have the option for a rug. So how it works is a liquidity pool uses what's called a bonding curve. Now, this is super intimidating language. Don't worry about it. I'll make it super simple. A bonding curve is basically a mathematical calculation that determines the amount of ETH in the pool versus the ratio of the amount of tokens left in the pool, and it calculates that to determine a price, an exchange rate. So basically, how it works is the more ETH, we'll use the example of Ethereum, but it works on Solana. It's the exact same on Solana or any of these things that have liquidity pools. The higher the ratio of the payment currency in relationship to the token that is being purchased, the higher the ratio of the payment currency, the higher the price of the token. So what these companies do, what a lot of these scams do, is they generate a shit ton of tokens. And as long as they hold, and they fund the liquidity pool. So the classic scam is they mint 100% of the token supply. Then they take 50% of the tokens and they create a token liquidity pair with ETH or Solana or whatever, and they create a liquidity pool. Then they advertise it to people, and people start to put Solana or put ETH into the pool in exchange for those tokens. The ratio skews, the price goes up. But the founders hold on a separate wallet 50% of the token supply. So at any given time, they can literally rebalance the ratio and bring the price down and take all of the underlying asset. So if they hold 50% of the max supply, they can at any point, if there's like 100,000 ETH in the pool, they can go into that pool and they can withdraw 100,000 ETH or 100,000 Solana or whatever it is. They can just go in and in one transaction, boom, it's drained. That is the definition of a rug pull. Now, rug pull is used all the time now as just scam. It's just a word for scam. But in the early days of DeFi, when people realized that this was a possibility, that's when we came up with the term rug pull, because you pulled the liquidity out of the pool. You pulled the rug from under everybody. So the actual definition of a rug pull is having the token supply that the founders hold that they can use to go into the liquidity pool and steal all the ETH. You can't do that with an order book. An order book, let's show you an order book just so that we are all on the same page here and we understand the context. I want to be very, very clear here. So this is an order book right here. Let's make this big. I'm not meaning to sound patronizing. I'm just trying to make it very clear. This right here. This is the order book. These are all the bids. These are all the asks. And the price in the middle, this price right here, is the last price that was paid. So this was the last deal that was made. The last time Bitcoin was sold on this book, it was sold at this price. Why this is important is you cannot rug this system. You can't rug it. There is no side pool of coins that can come in and just take all of the liquidity out of this book. It's a bunch of people making agreements on, I am willing to pay this much money for this much Bitcoin. I am willing to sell this much Bitcoin for this much money. And the price meets in the middle. I hope I don't sound super patronizing right now. It's a concept that a lot of people don't fully understand. So if you totally get it, that's fine. There's probably other people in the chat that don't get it. But that's completely different to a liquidity pool. A liquidity pool was invented as a solution to a problem that couldn't be solved on chain. Because a liquidity pool does not need super fast transaction outputs. Like Ethereum takes 14 seconds to settle, right? An order book is settling in real time. Like, there, we just had a price change. Volume's really low. Again, we just had a price change. Again, we just had a price change. Like, it's happening really, really quickly. And the blockchain does not have that throughput. The blockchain can't settle that quickly. Lightning can, and that's a different thing. Eventually, there actually are real order books, real decentralized order books that exist with Bitcoin Lightning. But It's just a common thing now in DeFi that you use a liquidity pool. Even with high transaction output chains like Sonic and Solana, really, like Solana should be able to support an order book. They choose not to. Why? Because the reason that a lot of these chains have value is because they are able to legally steal money from people. It's really fucking disgusting. Liquidity pools are 100% a scam. It was created as a band-aid. It was actually created to make stablecoin pairs. So the real purpose of the liquidity pool was to create stablecoins, which is totally honest and totally, I'm for that. DAI is a perfect example. So DAI is minted and created with its balanced ETH ratio to always equal $1. You can only do that with a liquidity pool. But then somebody took the stablecoin technology and they applied it to altcoins and didn't peg a price, and now you have a scam. And liquidity pools are 100% a scam. It's a band-aid and a scam. The real way that you determine price is with an order book, because it's one party making an agreement with another party. And that's just the way the world works. If you want to sell someone, you have to find a buyer. Plain and simple. Yeah, I could go down a whole rabbit hole about liquidity pools. It's also the way that the hex scam works. And that's a whole other can of worms. I don't know if you guys want me to get into the hex scam, but yeah, hex is manipulating the liquidity pool to artificially prop up price, and they could only do that so long, and then the inverse happens, and now that's why hex has had a 99% retracement, and then another 99% retracement, and then another 99% retracement. There is no bottom to those scams. If someone was really knowledgeable, would they not be able to find out the privacy details? No. If I sent you Bitcoin, if you wanted to transact with me, and I'm a paranoid power user, which I am, I will send you so many inputs and so many outputs that you will have no idea. You'll have no idea. Try me one time. I'll show you exactly what I'm talking about. But all of my transactions have so much plausible deniability, nobody would be able to prove anything. They will be able to prove that a series of transactions occurred, but they wouldn't be able to prove that I'm the owner of any of them. All right. So that's Monero and liquidity pools, hex scams, all the rest. How is Sonic doing? Anything nice happening with Sonic? No, not yet. Not yet. Let's visit IMX. Oof, yucky. Yeah, alts are just down bad. Alts are just down bad. As this chart keeps ticking higher, the alts just keep ticking lower. Do I dare look at dog with hat? Not surprising. It's exactly where it should be. What do you guys want to look at? Otherwise, I'll just wrap it up here. Recap on Bitcoin. This is the outcome that I'm leaning more in favor of now. I think because of this rounding over, we come down and retest this downward sloping line. I think this retest will be bought up very quickly. I think it'll be a V-shaped recovery, and that'll trigger the rally that we're waiting on. I think if we do move down, it'll be quick, just super quick. That's what I think. That's the probability that I'm leaning in favor right now. Another probability is a much deeper retracement, but I'm not, that's not how I'm seeing things right now. I think that the market's scared out of position for the most part. You have a lot of people who are sidelined. You have some people who are short, and you don't have a ton of bulls out there. And there's a lot to be bullish on Bitcoin. And with, any sort of economic catalyst, we will see really good, promising results on Bitcoin. MSTR looks like it wants to break back into the range. GameStop looks like it's finding a floor. We're just one simple tweet narrative away from heading up to higher levels, in my opinion. So the YouTube videos that we see where it exposes a scammer and everything, those guys are just not that knowledgeable to the point where they get identified. For the most part, yeah. So look at the things above. I have links there. Bitcoiner's Guide to Privacy. You can identify people on the blockchain if they're sloppy. If they know what they're doing, they know what they're doing. Now, the thing is, with a lot of the scammers are scamming on Solana, and they're scamming on ETH, and they're scamming on Binance Smart Chain. Those are relatively transparent blockchains because they use the accounting system. They don't use a UTXO system. Most scammers don't scam on the Bitcoin network. The Bitcoin network is private. If you know how to use it, it's private. If you know how to manage UTXOs, it's private. There is no privacy with an account-based model blockchain. So an account-based model blockchain, for those who don't know, is your receiving address is always the same. So whether you are receiving Ethereum or whether you're receiving a stable coin or a shit coin, it all goes to the same address. That's an account-based blockchain. A UTXO-based blockchain is every single time you receive anything, like every single time I receive Bitcoin, it goes to a different address. Different address. And every time you send it, you are deleting that address forever. So the best that you would ever be able to see if you were transacting with me is if I was being sloppy, is you would see the change in my address. You would never see the full amount. And I'm careful not to ever reveal that data. So I obfuscate that data with fake mixes, fake inputs, fake outputs, mirrored outputs. I will copy the same output. Like if I'm sending you 0.8, if I'm sending you 8 million sats, I'll do multiple 8 million sat outputs. So you don't know where the fuck it's going. You have no context. Yeah. UTXO modeled blockchains are way, way better. Can you tell us the process to keep your BTC private when sending and storing? Read the Bitcoiner Guide to Privacy that I have linked above. That is your step-by-step instruction manual on how to do so. But the easiest step, there's two things. The two easiest things for you to do is you acquire your Bitcoin without an exchange. That's number one. If you are getting your Bitcoin on an exchange that has your passport and all that bullshit, privacy done. They know how much you got. So you need to use decentralized exchanges like BISC. That's just an example. You could also go to crypto meetups where people are often selling Bitcoin. You have a lot of Bitcoiners like myself. I live on a Bitcoin standard. I'm always selling Bitcoin. I need fiat in every country that I go to. So, I'll often go to a meetup and say, hey, if anybody needs Bitcoin, I'm selling. And then I get the local currency of that country that I'm in. They get the Bitcoin that they want. It's a win-win. But that's rule number one. You cannot achieve privacy without KYC sats. Am I still streaming? I just got kicked off of the chat. Uh-oh. Am I still live? Okay. Okay, I'm still live on YouTube, it seems. Still live on YouTube. All right, well, it seems like I'm still going. My streaming software just glitched out there a little bit. Okay, so that's rule number 1, KYC free sats. Rule number 2 is every single time that you receive Bitcoin, you use a different address. Every single time. You never use the same Bitcoin address twice. If your Bitcoin wallet is a good Bitcoin wallet, it will automatically generate a new address. If your Bitcoin wallet is a shitty beginner wallet, it will more than likely give you the same Bitcoin address every single time. But what you want is every single time you receive Bitcoin, you use a different address. If you do those 2 things, you will exponentially increase your privacy. And then beyond that, follow the Bitcoin guide for things that you can do to level up the privacy that you would be doing as you're operating as what's classified as a power user of Bitcoin. That includes things like running your own node. A lot of people don't know the reason to run your own node. The only reason that I run my own node, it has nothing to do with supporting the Bitcoin network. The Bitcoin network is fine. The Bitcoin network's fine. It doesn't need my support. But I want to have the direct connection with the blockchain. If you don't run your own node, you are routing your transactions through another person's node. And you need to trust the person that you're routing transactions through. A really good example is Blockstream. So a lot of wallets, they process your transactions through a Blockstream node. Do you trust Blockstream? I think I could. I think I could trust Blockstream. But if you're worried about privacy, you don't trust. You don't trust anyone. Bitcoin is a trustless system. You don't trust, you verify. If you want to verify that your transactions are private and verify that nobody else has access to the information that you're posting to the blockchain, you run your own Bitcoin node. I actually run 3 nodes. And it's not hard at all. If you have an old laptop, I mean, you could run it on your own machine. You download the Bitcoin Core wallet, you wait 5 days, and that Bitcoin wallet is a node. So that's one way that you could do it. It will slow down your machine though, which is why it's best to put it on a different machine, a dedicated machine, because it really slows down the computer. But yeah, so, but the biggest thing that you can do, the biggest, most effective way that you can control your privacy is to just acquire your Bitcoin from non-KYC sources, and then never mix your KYC Bitcoin with your non-KYC Bitcoin. That's it. All right. If you guys have more questions, I don't know if you can tell, I love this stuff. I really do. I love this conversation. Bitcoin privacy. Privacy in general is something that I'm a big advocate for. So yes, I'm a trader. Yes, I like to trade altcoins, all the fun bullshit that makes you money, blah, 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 blah. But, privacy is a passion of mine. So I would love to keep talking about this, and I can keep talking about this. If you guys have more questions in regards to Bitcoin privacy and, the gives and takes of other blockchains, then hop into the Discord and fire away, man. Fire away those questions. To get into the Discord, you just got to go to blackbox.pro, create an account. Email password gets you an account. Once you're in your dashboard, click the join Discord or join community tab, and that'll get you into the Discord. Until next time, please trade safe. It is a jungle out there. Peace.